Hey guys, welcome to the market recap of January 19th to January 24th. And today's video will also include three parts. First, we'll look at the key data, and second is the industry news and trends, and third will be two deals. Okay, so let's start with the US stock market. This week, the S&P 500 reached 6,000 for the first time this year, and the Nasdaq reached 20,000, also a first this year. And the H shares has no major change, with A shares seeing a slight increase. While it may not be very significant, there are two important factors that should be considered. Regulators have required state-owned insurance companies to invest at least 30% of their new premiums into local stocks. Additionally, mutual funds have been instructed to increase their holdings by 10% each year over the next 3 years. These measures are expected to bring millions of Chinese yuan in incremental funds into the A-share market. The policy helped offset the damage to the stock market caused by the US government's threat to impose tariffs on Chinese exports. In another part of East Asia, the Bank of Japan decided to raise its benchmark interest rate from 0.25% to 0.5%, the highest level since October 2028. The rate hike is the third since the BOJ restarted its tightening cycle in March 2024. This week, I mainly focus on the tech sector and the energy and material sector. So let's start with the tech sector. Donald Trump, along with several major US tech giants, announced the formation of a new joint venture called Stargate, aimed at building new artificial intelligence data centers in the United States. The initiative promises an investment of $100 billion in the first year, with a total of $500 billion invested over the next 4 years. On Tuesday, SoftBank CEO Masayoshi Son, OpenAI CEO Sam Altman, and Oracle Executive Chairman Larry Ellison joined President Trump to announce Stargate. However, there are several unresolved issues surrounding the project, with the most important being the source of funding. Both SoftBank and Oracle have substantial debts on their balance sheet, while OpenAI, as a startup, still relies on investor funds. According to MarketWatch, UAE-based investment company MGX may bear much of the financial burden. The official announcement of the project has also had a positive impact on the stock prices of chip manufacturers such as Nvidia and quantum computing-related companies. Now let's move to the metal markets. This week, Saudi Arabia's investment mining fund Manara Minerals is in talks to acquire a 10 to 20% stake in the Reko Diq copper and gold mine projects in Pakistan, with an investment amount ranging from $500 million to $1 billion. The project is jointly developed by Barrick Gold and the Pakistani government, with a total investment of approximately $9 billion. Once completed, Reko Diq is expected to become one of the largest copper mines in the world, with an annual production of 400,000 tons of copper and 500,000 ounces of gold. Through this investment, Saudi Arabia aims to secure the mineral supplies needed for the industries and accelerate its expansion into the mining sector. The deal is expected to be finalized within the next 6 months. Another metal-related piece of news is about nickel. This week, the Indonesian government is considering a significant reduction in nickel mining quotas to support the persistently low nickel prices. Over the past 2 years, nickel prices have dropped by about 40%. Currently hovering around $16,000 per ton. Officials from the Ministry of Energy and Mineral Resources in Indonesia have stated that they are evaluating the possibility of reducing this year's nickel mining volume from 270 million tons last year to 150 million tons. As the world's largest nickel producer, Indonesia's adjustment in production will have a significant impact on the global market. However, there are still discussions within the government considering factors like taxes and investments, and no final decision has been made yet. Finally, let's look at the deals, and they're all happening in Hong Kong. Cia.L plans to conduct a secondary listing in Hong Kong with a fundraising amount potentially exceeding $7 billion. To compete for the underwriting rights to the project, major banks have proposed extremely low underwriting fees. CICC and CITIC securities have even quoted as low as 0.01%, far below the industry average. Meanwhile, despite Cia.L being placed on the US Department of Defense's entity list, US investment banks such as JP Morgan and Bank of America are still involved in the competition. The second company is called 51 Job. 51 Job is set to list in Hong Kong as early as the second half of this year. Back in September 2004, 51 Job became the first Chinese human resources service company to list on a stock. Currently, 51 Job mainly offers three major services: talent recruitment and talent search. It operates two job platforms, providing training courses and learning system for enterprises, and HR outsourcing services. As of now, 51 Job has accumulated over 200 million users. Alright, that is the end of our market recap for January 19th to January 24th. If you think this video is helpful, please don't forget to like, comment, and subscribe. Okay, I'll see you guys next week. Bye!